Hey guys, it's Dan here, your investment banker. I want to talk to you today a little bit about recent market news and precious metals and a little bit on the Greek situation. We'll touch on that after this. Um, so, late Thursday night, the CME lowered margin requirements for gold, silver, and some other metals like copper. It was kind of out of the blue, it wasn't expected at all. And a lot of people online, if you do a Google search, predicted that gold would jump on Monday, which is today, February 13th, 2012. Um, I kind of felt that it wasn't just because uh, it really created uncertainty. And if you read, any investment book, they talk a lot about the biggest risk in markets that investors fear is uncertainty. And even though they lowered margin requirements, this actually increased in uncertainty because no one knows, if the CME is just going to raise requirements in a week, 2 weeks. It's just so uncertain what they're doing, and I think I kind of have an idea of their game plan, and I think they're actually trying to trap investors in gold and silver on the run up. I really honestly think that they're trying to lower the margin requirements so everyday ordinary people that hear about gold on the news or online or whatever, um, they're going to pile into gold and silver, and then what's going to happen is the CME, 2 months, 3 months down the road, when gold is trading at 1950 an ounce, breaching 2000, they're going to raise margin requirements. And what this is going to do, it's going to create a massive sell-off, and the regular, you know, average investor that doesn't really, get too heavily involved in the research with gold and silver is just going to get pummeled. And I think they're doing this on purpose so that when that happens, people in the future will not really trust gold and silver as a currency, as a metal, as an exchange of value, or to protect their wealth. So I really think this is what they're trying to do, but I could be wrong. I'm just from the past. This is my opinion of of what the CME has done. So that's that. Also, the Greek situation. They just passed the austerity bill. So if you saw in the news, there's all sorts of riots and craziness going on over there because their culture has been fed the 50 years worth of welfare and basically overspending on everything they think they're entitled for. But anyways, that's another topic. So the EU is going to vote sometime this week, I think by Wednesday, uh, for the 130 billion in exchange for that austerity package. So, anyways, I was just going to say that this is positive news for gold and silver. It shows the EU and the ECB, the Troika, um, commitment to actually just printing more dollars and really just at for no value. Really, Greece um, is gonna have to leave the EU. Unfortunately, for some people, I think that's a good thing. I think it's good in my opinion, but we'll see what happens. I think by the end of the year, Greece will not be an EU member, and possibly Portugal or Spain could as well. I think maybe a couple of Eastern European economies like Hungary are going to fall away entirely just from Europe, and I really think this winter is doing a lot of damage to them, and it's the worst on record in decades. I know that, so it's costing them a lot of money every day. And well, we'll see where gold shoots up to. I'm just looking at the news right now. Apple breached 500, which is, in my opinion, I would, if you have a lot of Apple stock, I would divest a little bit, take profits when you can, because in the next 3, 4, 5 years, you could really, yeah, you could. There's really a good probability that the entire stock market could come crashing down 6,000 points, in my opinion. Anyways, well, this video has been a little long. I want to keep them under 5 minutes, so I'll create another one here in a little bit, and we'll talk more. All right, thanks a lot, guys. Have a good one.